to me, where trust comes from is representation. So being able to show people stories and examples and individuals that maybe are coming from similar backgrounds to them and say like, no, I can vouch for this. This is something that I tried.
Nothing better than credibility like that. Totally.
Yeah. Like maybe it was scary for me when I got started, but I did this and you can do it too.
Welcome to Warrior Money, the show devoted to supporting our brother and sister veterans. I'm Patrick Murphy.
And I'm Dan Kunze.
Today, we're tackling a challenge many veterans face, how to take those first steps into investing. And whether you're just starting out or feeling behind, you're not alone. We're getting honest about the confusion, the fear, and the myths that keep so many of our brother and sister veterans from building real wealth. We're going to share our journeys, discuss the roadblocks, and discuss how anyone can start building a more secure future. So let's get after it. All right, Dan.
Patrick Murphy.
We talk about this bottom line up front, except how you make your money work for you.
Yeah, how you might make your money work for you. You just got to get started. I know we talk about this a lot. Like you and I have talked about this a lot for a really long time. And I started investing when I was really young. I was like 15 years old, so I did it before military. But when I was in the military and I was at basic training, or I was at officer school, or I was even in my units, right? Money was the number one, like literally the number one question outside of military stuff that people were asking. They're like, yo, like I got my first paycheck. What do I do with it? And the answer is not to go buy a car. So like the answer is, all right, let's get some really foundational stuff in place. Like, do you have a brokerage account? Are you investing in TSP, the thrift savings plan? Are you doing kind of foundational things just to get started in investing? Yeah. And once you're starting to do that stuff, it's like then it starts to create this whole wonderful halo effect because you actually got $1, then turns maybe $1,000, which maybe turns into $3,000. Then all of a sudden you actually have a little bit of money, and then oh my God, the market to 15%. You actually got a little bit more money, and you didn't do the work for it. So it's just like this thing you see as a self-fulfilling prophecy kind of thing.
Yeah, and I think advising young Americans, veterans, even older Americans, like it's baby steps. It's a trust. It's first, have a budget. Number 2, don't go into debt. And 3, invest, but make a plan and make your plan work for you.
Yeah, totally. I mean, the don't have debt. That's like part of the reason why the value proposition for why I joined the military in the first place. Like, I had the opportunity to get student loan repayment. They was really grateful that happened. But I can't imagine right now if I was making $1,000 or $1,200 a month student loan debt, how I'd actually be accruing wealth in the first place. So I think that's a really important point. Like, use debt when it's smart. Maybe go buy your mortgage using the VA home loan benefits, but be really smart about the other debt you incur, like car loan debt and all the other stuff that you don't maybe don't need at the time. So get yourself a little nest egg first, and then let compounding interest do its thing for you.
Yeah, I mean, when you look at, because I know you live in Tennessee, so we're outside of Tennessee is Fort Campbell, Kentucky.
Yeah.
101st Airborne Division, Night Stalkers. But you think about Fort Campbell, Kentucky, within 1 mile, there are 22 payday loan providers.
Yeah.
Right? And again, people might say, well, I'm going to borrow money to invest. Like, no. Like, have a budget. Don't do that. The best advice I got when I was a young kid, I was about to be commissioned as an Army officer, was Captain O'Donnell, who now is at Fort Knox, Kentucky. Captain O'Donnell said that all of us, he said, do not buy a new car. I know as a second lieutenant, you're making a lot of money, $27,000 a year at the time. He said, but do not buy a new car. So my first car was a used pickup truck I got my first car. I came back from Fort Knox, Kentucky. I bought a $500 stick shift white Isuzu pickup truck. I didn't know how to drive a stick. I'm like, I'll figure it out. Right? But too many people were like, oh, I'm making a ton of money, and then we go buy, and they just basically chase, the Joneses. They chase, I want to get a nicer car, I want to get a nicer house, and they forget, hey, it's not about just getting by now. It's what are you doing in your future and making your money work for you.
Yeah, it's really. You say payday loans. I thought you were going to say car dealerships, because there's a whole bunch of used car dealerships. Every post I've ever been on, there's like they're right outside the gate. I think the comment though about getting started, like if you are in the military and you're currently serving, and I was an armor officer, I didn't have the time to actively invest. So part of the answer is automate your investment. Like, get yourself a Vanguard, Fidelity, Schwab, I don't know what the account is. Create a little brokerage account, and every time you get paid that isn't your 401k, just put $100 or $50 or I don't even really care. No. $10. Just automate that savings into something that lets your money start to work for yourself, and then watch the S&P 500 do its thing. Like, I mean, we talk about this thing like it's like complex. The complexity is figuring out how to trust something, but all the tools are in place for us to do it in the first place.
Yeah, I mean, I even tell my kids, I have, my daughter Maggie, she's going to college next year. She can do Air Force ROTC. My son Jack is 15. Jack is, he's working 2 jobs. I woke him up this morning at 6:15 in the morning. He works till 1 o'clock tonight because he's at an ice cream shop in Wildwood, New Jersey. But, he has his Robinhood account, right? We talk about stocks, we do it. But, I tell him, you got to put your money away. It's okay to invest, but it's like, be stoic. You got to fire and forget. You got to put that in there. And if it stays in the S&P 500, it's more likely to grow and double within 7 years.
Yeah, it's also like kind of this mindset that we have about there's an ability to get rich quick. Like, I'm going to hit the next, like, I don't know, billion bagger or whatever. Billion baggers, like how many times over my money's going to compound. But like the reality is 8 to 12% over 7 years turns in double your money. And you've got 7 times intervals to do that. You're doubling your money every 7 years. That's a lot of money over time. And like people really want to get rich in 7 years, but the reality is like get rich over 35 years or get wealthy or get secure over 35 years. You don't have to do it tomorrow. And that I think is the FOMO that a lot of folks in the military community and the athlete community and kind of like the world where they tell me I should invest, but I don't know how to do it. But I think I should do it by getting rich quick. Like that doesn't work that way. You start quickly, you start slowly. You watch that expand over time. You do it consistently, and you're going to see those numbers go up.
Yeah, and what I tell folks, diversify, right? So obviously, you have bills, housing, car, expenses, whatever. But the more you can like just keep it, sane and not go nuts. But also then, all right, I'm putting this aside for the TSP or the 401k program that I have. And then, all right, I'm going to invest this money here. And even if you want to go invest in Bitcoin or crypto or whatever, go do it. But the S&P 500 is the one that's going to be rock steady for you. So just diversify that and be somewhat stoic. And don't think you're going to become a day trader if you have a job that's intense.
I totally have to admit, I have to confess, I literally just changed my Bitcoin strategy. I do $10 a day. I also do $2 every hour. So I'm watching my Bitcoin go up. I'm like, what am I doing right now? But I believe in it. I believe in automatic investing in my brokerage account, which I do. But I also believe like every time you make any level of money beyond what you normally make, like operating expenses go into one bucket, your investment goes in the other bucket, and just have a little system worked out where you're like, hey, I'm going to put it this way. I have an advisor for that account. I have an automation for that account. I don't know what it is, but somewhere where I don't think about it. And then that side, you pay for the things you want to. And if you get an extra 20 or 30 grand and you want a nicer car, cool. Like you earn that. Like that's fine. But don't like deprive yourself totally of the good things in life.
Right. Yeah. But I do think for a lot of our brothers and sisters out there, it is overwhelming. And that's why we try and tell them like, just take baby steps. Just, again, make a budget.
And if it doesn't look like it's happening immediately,
right,
just like let it be.
Right. Right. But stay away from debt. I mean, that's another thing. I mean, you want to make your money work for you, but if you're still digging a hole by going into debt, that's not going to be the balance that you need in your life.
Yeah, I have a little bit of an opinion about that because like my personal balance sheet, my net worth has gone up significantly because I own a house. And so that debt is debt that I'm okay with, right? And I'm like okay paying that debt off, and thankfully I have a VA home loan to help me with it. But like, I agree with you. If you get out over your skis on a house, even if a house you could potentially afford, but you're not able to save and invest in other buckets, like you got to be really, really mindful of like, hey, just because you're approved for that mortgage or just because you're approved for that car loan doesn't mean that's what you should take. And I think that's like the number one thing. Like, hey, they told me I can buy $1 million house. Like, well, cool. Right. But like a $650,000 house today, if you hold it for 5 years, is going to be worth $800,000 or $900,000. And then you turn that, maybe a little less than that. But then you like, hey, then I'm going to flip that in the next house. And then you gradually upgrade houses over time. Like that's what we mean by compounding. Like give yourself the opportunity and space to live within your means today so that you can actually extend tomorrow.
Yeah, I know you and I are both Dave Ramsey fans. Tell me some of the stories that weren't so great. Some of the lessons that you see maybe other people make mistakes or mistakes that you've...
I'll tell you the lessons I've learned. Like personally, I took out too much money for a car loan. Like I thought I got over my skis a little bit, and I bought a car years ago. And when I went to trade it in, I was underwater on the car, so I actually had to pay more money out of pocket because I financed the whole thing on a car loan. It was just like one of those, I know better. It was a simple, stupid mistake, but I was dumb. I was getting out of a lease. The miles were up. I was like, oh shit, what do I do there? And then so I went and I went and did it with a car, and like it was a bad decision. I've also had the tendency, like from time to time, to, all right, like, well, I'm doing well now, so that money's always going to stay the way it is. But like lifestyle creep's a real thing. So you got to like, hey, just because you're doing well this year doesn't mean you're always going to do well next year. And then the third lesson, Taxman comes every April. Taxman comes every April, and he's going to get his piece.
There's nothing certain like except in taxes.
So Taxman's coming in April. I don't know what you think he's. I don't know what you think he's coming or not coming. He's coming in April. So you got to know your taxes and how you're preparing for that stuff.
Yeah.
What about you? I'm interested in here.
Yeah, I mean, I think part of it was I had such great role models growing up. And keep it. My parents, they didn't overextend themselves. And, you know, people like Captain O'Donnell, who basically was like, hey, don't be stupid. Don't go buy a new car. Save your money, put it away. And, you know, for me, it was like, all right, I always maxed out in the TSP. I did that. And now, obviously, I've since, you know, especially over the last 5-6 years, when I left public service, I was really able to ramp up, you know, my investments, right? My brokerage account, et cetera. And then, you know, I bought a second home, all that stuff, like, right? But to me, it's like, and I got 15-year mortgages on both my homes. So to me, they were smart investments. I'm proud of it. You know, but I want to make sure that I don't get over my skis, right? And my daughter's starting college, like, you know, my son. So those type of things are, and I'm always like, hey, what's the rainy day fund look like, right? Because if things go bad, you know, I'm trying to help out my parents and my kids, and so
it's kind of interesting. I know shit. What I started doing, I actually take my portfolio and I've taken some of my credit card statements and I run them through ChatGPT, and I'm like, hey, like, what do you see here? What are the trends here that you think that I could change? And they're like, hey, you could do this. You could think about doing this, or you could think about reducing expenses here. I find it super helpful for my credit card statements, like, because I only use 2 credit cards. Like, I think people get mistakes when they start using like 4, 5, 6 credit cards, and then they're making minimum payments.
Yeah, I have a business one and a personal one.
2 cards, right? You make 2 cards, but like, if you consolidate your expenses in one place and you get to see what you're doing, then you get to see my repeating expenses, and I get to see my frivolous expenses for things that like I don't necessarily know. And then now you know where to cut. And like, yeah, man, like if I really like getting my hair done every other week, like, or my wife likes here, like, that's cool, but like, it costs $300 every time you go in there. So it's like one of those things you got to start to look for.
I think a lot of folks look at the numbers. 62% of Americans own a stock, but the majority of those that own a stock is in the 401k program. But the majority of stocks in America are actually owned by the top 1% of wealthy people.
Yeah, it's an issue. It's an issue.
Yeah, so there's a reason why wealthy people invest in the stock market. Right?
Yeah, and it's really why they talk about like, hey, I only want so much money in income. Like, I don't. Like, and this is a really good problem to have, but like, I don't need to make much more than a certain amount of money in take-home income, because I'd really rather have that in the form of equity or in the form of ownership, because the tax incentives, the tax structures are very different between the two.
Right. You don't have to pay the tax man as much.
It's just you always have to pay the tax man. It's just a matter of how you pay the tax man.
Delayed gratification.
Let my wealth grow over time, as opposed to like giving them 36 or 40% every year at the end of the year. That's what it is.
All right, I'm a staff sergeant in the Army. I'm making $55,000 a year base pay. Not talking about, you know, where you're getting a basic allowance for housing, et cetera. What piece of advice would you give Staff Sergeant Kunze?
I would tell him what I would tell everybody else. So I'll tell my kid this: just open an automated savings account. Like, open an automated savings account. If you've got a bank, if you use any of the major military banks, if you use your old hometown bank, whatever it is, just like take a part of your paycheck and automate that paycheck into a savings account. I don't even care if it's not getting any interest. Just like, if you're not already doing that, just automate a savings, right? Just get $100 in there. Do that for 12 months, and then you got $1,200 in there, right? And then look for your first opportunity to maybe invest in a money market account. I'm literally telling you like the most basic stuff you can possibly do. Automate your savings, get yourself to your first yield account, and then from there you've got $1,200, $1,500. then you might be able to start minimums on an S&P 500 index fund. Like that's literally the most basic way that I would do it.
Yeah. And listen, it's you just got to be disciplined and do it.
Yeah.
So it's something that people should not feel overwhelmed about. Some people should be confident about, but it is baby steps. But make sure plan your work your plan. Number 2, no debt, and 3, make your money work for you. It's a rare trait for people who can make their money work for them and then to save it and not try to keep up with the Joneses, not kind of get over their skis. So we have a phenomenal guest in our second half of the show. We have Trevor Rozier-Byrd from Stackwell Capital. It's going to be awesome. We'll be right back on Where Your Money. Welcome back. We talked about our ups and downs getting started as investors, but now we want to bring in someone who can make it easier for veterans and underserved communities to help take that first step. Trevor Rozier-Byrd is the founder and CEO of Stackwell, a fintech company on a mission to break down the barriers to investing and helping more people build real, lasting wealth. Hey, Trevor, thanks for joining us on Where Your Money.
Thanks to be here.
All right, so you were a college athlete. So let's talk about that. You're a BC, then went to law school, BU.
Yep.
But what got you in? I mean, you were at one of the top law firms in the nation, but you gave it up to start going in the fintech.
Yeah, I mean, I think for me, you talked about being a former college athlete, and so much about that, just the competitive nature of it, being in an environment where the pressure was always on and it was on you very specifically. I felt like I was missing that early in my career, and I wanted to continue to find opportunities to get closer and closer to situations in an environment where I had agency and control to make decisions and live and die with whatever those decisions might have been. And so as I progressed in my career, it just, it became very clear for me that I wanted to step out there and do something where I had the ability to set a strategy, drive execution, and live the results at the end of the day.
Yeah, that again, I kind of come from blue collar background, and the fact that we try and serve the veterans community. I know you are focused on underserved communities as well, and helping them build real wealth.
Yeah.
What does that look like at Stackwell?
Well, I think for us, the biggest thing is that regardless of what your background is, there are so many people in this country that believe that investing in the financial markets, being able to have a financial advisor, being successful financially is not something that is for them, right? It's, what we see on TV or in the media paints a picture that is not representative of the vast majority of our experiences and backgrounds that many people have. I look at the veteran community, like there is no greater example of just like the diversity and nuance of experiences that exist in our country than the veteran community. And really what we're trying to do at Stackwell is say, look, no, we see you. We understand that, maybe your historical relationship with money is strained because of how you grew up, right. And that's okay. Like we have a tremendous amount of empathy for how you show up today, but we also have this unwavering belief in your upward mobility and trajectory and the ability to accomplish the goals and outcomes that you have for yourself and for your family over, generations to come.
Yeah, one of the things that's really, we talk about this a lot, right? So every soldier, sailor, airman, Marines life and career will end in service. Like you're going to end your career at some point in time. And every athlete has the exact same like critical juncture point. Yep. So it's like, there will be a day where I'm not good enough to play on this field anymore, or so hopefully somebody else retires you. It is what it is, right?
Yep.
So the journey is like, how do you transition that life that you lived to finding the life of purpose whenever you're on the other side of that purpose kind of sphere that you're talking about?
Yeah.
Talk to me a little bit about how this called your purpose. Like, how did you get into this in the first place? And why do you care? Like, why do you care about this? Where did that come from?
I love that question. And there's so much nuance to it because like on the one hand, you're kind of speaking to like my desire to drive impact and change in communities that I care about. And, for me, like, I had the opportunity to work at some large corporate law firms and Wall Street firms, and it exposed me to a whole host of things and pathways to building wealth that we certainly weren't talking about in my family, and I always thought were not for me.
You didn't even see it in law school, something like, hey man, I'm like studying Civ Pro. I don't know what is this? That's weird.
You don't understand it, but I guess the more and more that I saw it, I was able to start to make connections to other things that I had done in my life, right? So we talked about me having played sports. The thing about sports for me is like it teaches you how to build habits and behaviors and accountability to self and other people, right? Similar things that you experience in, the service, right? So being able to drill the fundamentals and create these habits of consistently showing up for yourself and for other people that you care about are actually the exact same things that help you be successful financially. All right. So it's not about how much money you have, not about how much education. It's like, did I put money away this month? And did I do it again next month? And I'm getting the benefit of
But it's also like you're also helping people compound the level of trust though, right? Like if you don't know how to do it and you save your first dollar, then like that doesn't go away.
No.
And people are like, oh my God, my dollar is now my whatever. And you're like, all right, now I'll do $10 because I trust that this infrastructure is in place.
Yeah. But to me, where trust comes from is representation. So being able to show people stories and examples and individuals that maybe are coming from similar backgrounds to them and say like, no, I can vouch for this. This is something that I tried.
Nothing better than credibility like that. Totally.
Yeah. Like maybe it was scary for me when I got started, but I did this and you can do it too. It's like the underlying theme or message that our company stands for.
Yeah. I think that's one of the special things because it's like you make it easy, break it down for folks to say, you could do it too. Mm-hmm. And this is what right looks like.
Yeah.
You did talk about being an athlete, Trevor, and I know there's some athletes that supported, obviously, Stackwell, Chris Paul, Melo, Dwayne Wade, the Visionary Ventures, initiative. Why did they invest in Stackwell, and what were they hoping to get out of it?
Yeah, I think for them it's the same thing. Like opportunity is not created equally in this country, and so they had their own set of experiences that shaped the way in which they see the world. And I think for them, using their platform for good is something that really matters to them. And they all have been very fortunate to be able to leverage the playing careers that they've had to go off and explore other business ventures. But that's still not without its challenges, right? And those are people that have tremendous amounts of means. So I think for them, when they looked at the Visionary Ventures program, it was about a conscious acknowledgement of the challenges that exist for many people coming from underrepresented communities when it comes to like the intersection between personal wealth and business financial stability. And if you don't have the first piece, it's really hard to be successful in the business world. And just creating better opportunities for more people to engage and create other platforms or avenues to build long-term sustainable wealth.
It's also really hard to go from like the labor employee side to like to flick the switch, like I'm now on the capital side, right? So we talk a lot about athletes. We also talk a lot about soldiers. Like there's a very clear perspective here. Your playing days are over and all you're doing is eating away at your money. And then you die with nothing or you leave nothing, right? So at some point, there's an inflection point where you got to transition to the capital side, right? Make your money work for you. And I think that's really what we're trying to describe is like, hey, you can be an employee for a while, but you've got to start to think about how you become a lever of capital because capitalism requires you to exploit your dollars.
Yeah, I completely agree with you. And I think the way that we try to talk about it is like this concept or notion of ownership, right? So when you become an owner, you have the ability to start to shape and direct outcomes that matter.
To include just an equity stake. Like if I own a couple of shares, I get to vote now. Like,
yes,
that's all it comes down to, right?
Exactly. And I think, again, going back to why I started this company, it was early pandemic. There was a lot of social unrest going on in our country at the time. And I think for me, I had this level of frustration about what was not likely to change, right? And if we truly wanted to have the ability to transform our future and achieve different types of outcomes, more people needed to have a voice in that process. And access to capital or lack thereof directly impacts your ability to have that voice.
Yeah, and I think for our community, the veterans community, just like the communities that you serve, people tend to get overwhelmed, and they shouldn't. And you look at the stats. I mean, 62% of Americans own stock, but the majority of that is really 401k programs, et cetera. So you really empower people to let their money work for them. If I'm Patrick Murphy in the street and I come to start, what would you offer me? How does that work if I want to be part of your team?
Yeah, what we offer you is a clear pathway to getting started, right? So for many people, the notion of saying like, okay, I know I should invest. I know that this is something that's important for me to do, but it's like, how do I start? Like, what do I pick? What stock do I pick? Right. And given that we understand how challenging that is, we help automate that process, help people make decisions to get them into well-diversified portfolios, because we know that that is like the most sustainable way for anybody to be investing in the market. So we're not encouraging risky behaviors. We're giving people education in a contextualized way to help them understand how they're going through this journey in a progressive way, and really providing like the positive affirmation that not only do you belong here, but you can reach the financial goals and outcomes that you're trying to pursue while you're working with us on this.
What does contextualize and progressive mean? Like I hear those words, right? But like I'm thinking about somebody that's like 22, like maybe an athlete, maybe a soldier, right? 22 years old. I have no idea what you're talking about. Like what does it mean to be like, hey, we're going to meet you where you're at, like kind of go through that journey?
So as an example, we have built model investment portfolios, which is just a fancy way of saying we help you pick a number of individual securities to invest in. Those securities that we invest in are ETFs. A lot of people may not know what an ETF is. So in the process of helping you build your portfolio, we're also giving you education about what does an ETF actually mean, right? It's a basket or a collection of securities. You could have ETFs that cover the S&P 500. What is the S&P 500 actually? Yeah, right. Yeah. So it's like done in a disarming, non-judgmental way. But it's like as you're starting to make the decisions to get started, we're also helping you be more confident in this process because you know what all these terms now mean.
Just buy your first shares of the S&P 500, right? Or get an ETF. Like just get started in the game, and then you'll learn over time and aggregate it that way.
Exactly.
Nice.
What's one piece of advice you got out there? People are sitting on the sidelines, but they should get in the game to let their money work for them.
I think, the biggest piece of advice that I ever got was just to get started, frankly. It's not about trying to time the market. It's about time spent in the market, not about how much money you have or save and invest. It's really just the ability to get your money into places where it can work and compound for you. So getting over that initial hump of saying like, maybe I'm not as smart as all these guys on Wall Street or whatever, but you're not as smart. Don't worry about that. That was one of the first things where like, well, actually, if you're just a normal everyday person and you have a process or a plan, right, follow that, you're going to be more successful there. Most people
just look at the S&P 500 average and see how many money managers actually exceed that. Like it's not.
Yeah, we tell people, plan your work your plan, be stoic about it, put it there, kind of fight and forget after it. Hey, Trevor, we got to take off. Thank you so much for joining Warrior Money. We appreciate you.
Yeah.
So listen, that wraps up our show. So listen, subscribe, and review Warrior Money on Apple Podcasts, Spotify, wherever you hear podcasts, or find us at Yahoo Finance. I'm Patrick Murphy.
And I'm Dan Kunze. We'll see you again next week.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.